Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is November 6, 2023. And let's go over your three threes for the week. We get consumer sentiment this Friday. We get another big week of earnings. And then the market rallied last week. And do we get a follow through? Let's find out. All right, here's a recap of the markets. And as you can see from the chart, the equity markets shot up and they went up 5.8% or higher. The bond market in the form of the aggregate bond index was up over 2%, which is a big move for the bond market. And gold was basically flat for the week. Let's go ahead and zoom in and see how we got here and how this is affecting our position.
Okay, let's go over the market headlines from last week. Number one was the U.S. stock index posted their biggest weekly gain of 2023, reversing course just a week after the S&P 500 and NASDAQ entered correction territory, being down more than 10%. As you can see from the chart, it was a very big week, and we have to go back all the way through to October of 2022 to see a similar type of weekly rise, and that was actually the almost the bottom of 2022 and actually the start of the recent bull run that we have seen. But let's see how that is working on the S&P 500 on the chart. Here it is just right below the next resistance zone. As I said, we're probably going to be trading in between these two, and I said we were oversold, and we did get a very large bounce. As you can see, 5 straight days of up moves on the S&P 500. I would get a little bit more excited. We still are in protect mode. We still remain defensive. We did make some slight moves in our portfolios, but I would get a little more excited if we get above or into this next resistance zone. So above 4,400, I would get a little bit more excited on equities and believe that there's a Santa Claus rally, but we may not find that out yet for another week or two. We shall see. All right, headline number 2 is the yield reversals. We actually had a shift in the U.S. interest rate outlook triggered by big weekly moves in the bond market as the yields of the U.S. Treasuries fell, interrupting the trend of what we were seeing when the yields were sharply rising over the last 7 months. The yield on the 10-year dropped. It hit 5% and then dropped to finish out the week at 4.57, which was down from 4.83 the week before. But as you can, if you zoom out and look at it over a longer time period, this was a very small move on yields, but it all happened in a week. One big possible mover for this week could be Wednesday when we have our 10-year auction, which will give us another feel for what they feel is the actual yield for the 10-year. But let's take a look at the chart of the aggregate bond index. And again, remember, we went to protect mode on May 17th. And again, another big move. It actually was the last 3 days of the week. And again, it just closed this gap that we saw at the middle of September. And now it actually created 2 more additional gaps. So I anticipate we may close these over the next week or two. And then maybe get a bounce. We shall see. We'll get more data then. But I would probably be a little bit more interested if this thing could go up in the 95 to 96 range for the bond. So again, we remain defensive on bonds, at least right now. All right, the number 3 market headline from last week was Friday's job number. Okay, it was supposed to come in at 180. And it came in at 150, so that was dovish. The market liked it, and that continued the market upswing. But they did revise a lot of these job numbers. Last month was a huge 336. They revised it back down to 297, and they actually revised 7 of the last 8 months. The last 2, they lowered the job numbers 101,000. The 2 biggest areas are education and health, and government jobs was number 2. All right, so let's look at the top 10 major asset classes, their performance and positioning. And of course, with a big week like that, we're going to anticipate there is some movement on the short term. And the S&P NASDAQ went back to bullish. The world and emerging markets, a lot of the equities moved. But if you zoom out on an intermediate term basis, there was no moves. Even with this large move, we still remain bearish for the most part on most all of the major asset classes out there and remain bullish on the US dollar, gold, and commodities. All right, let's look at the top 3 market movers for this week. It's really all about earnings this week. And on Friday, we get consumer sentiment. So we get the feeling of how the consumers out there doing. And then again, do we get a follow through this week? We may not get it till next week when the CPI comes out, so we can take a look at inflation data. So that's pushed off till next week. So this week, I'm not really sure, but we probably are not going to see follow through. It may be a muted week, and we may get the big move next week. All right, here's a listing of the corporate earnings for this week. The 2 biggest probably are coming on Tuesday with Uber and Walt Disney on Wednesday. That's it for this week. Thank you for joining us. Our next update is Monday, November 13th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.